Welcome back and thanks for being with us. We have with us Nishchal Maheshwari joining us at this hour. He's market expert and of course fundamental analyst. Kunal and Ruchit continue to be with us. Nishchal, great having you. Really what we're trying to decode, Nishchal, is what's playing out in IT. Sudden spurt in the index itself. You believe this is just par for course towards probably the stocks and the interest coming off again at some point of time in IT, or do you believe that now structurally things look a little more certain as the commentary starts to come in from some of the IT companies?
So good afternoon to you and your viewers. Basically, I still do not see any change in the commentary. The only thing which I see is the management more not as pessimistic as they were in the last 2 quarters. And I think that is what is triggered this. But I think a bigger thing is basically has been the valuation and the sector being decimated in the last quarter, particularly in the last 15, 20 days. And thereafter, basically, we've seen this kind of a rally. So I still believe basically this is a sort of a rally only. I don't see any fundamental change happening as yet, because you still do not know what is going to be the outlook on the sector and who are going to be the winners. So this is a broad rally, if you look at it, saying more of a relief rally than anything else.
That really seems to be the case right now. Kunal, you're quite convinced about the move on IT, right? Does it look durable and sustainable?
It looks, Aisha, because at least the first part of it, that the sector required more of a short covering, that's now coming into these IT stocks. You look at the kind of positive candlesticks. Now, just to give a snippet over the last, I think, 7-8 days, there have been 3 major candlestick up moves for the IT stocks. And in those 3 big days, the IT stocks have moved on an average 3 to 3.5%. That's a substantial jump for these IT stocks in a very short span of time. When you try and compare this with the last maybe 1 month, 3 months of price action, we've not seen that this kind of an up move for the IT index at large. The other data is that so many of these IT stocks were into a deep oversold territory. There was a point where the Nifty IT index, the ratio or the pair chart with respect to the benchmark indices, even that was at a slight bit of an extreme. So the IT index was not just oversold, it was the constituents also for the IT stocks, which within themselves also posed a very strong degree of short covering kind of an opportunity. The initial bout of short covering generally lasts for a 10% upside when we look at it from a short-term swing low. And then what matters is if the news flow starts to become positive for these individual IT names, long-term investors, delivery-based buyers, they start to enter into the stock. So we need to see maybe phase 2 for these IT stocks, but at least the phase 1 so far indicates that it's a decent short covering at play.
Okay, decent short covering at play, and that's surely taken the Nifty IT index up, and along with it, the rest of the market as well, at least at an index level. But Meryl is here to highlight some of the other buzzers this afternoon.
That's right. These are some of the stocks that we've seen buzzing in trade today. Starting first with Bharat Dynamics. The company, now there's a new notification from the Defense Ministry, where the Defense Ministry is expected to invite bids from private players to manufacture the Astra Mark II beyond visual range air-to-missile, which is a range of missiles. Now, originally, the Defense Ministry did not usually accept bids from private players. So this is going to be changing the landscape for missiles manufacturing, which is why Bharat Dynamics is seen under pressure today. Moving on, TTK Prestige is also in focus. Normal manufacturing operations have been resumed for the company's Roorkee facility starting the 11th of July. Now the company is still assessing the potential damages to assets, including inventories on its books, but they have reassured investors that most assets and all assets are duly insured. Moving on, LTM is also in focus after reporting an overall in-line performance this time around. USD revenue in INR terms, EBIT margin and PAT all have come out in line for the company, with the company recording a flat US dollar revenue, which was more or less in line with the street's expectations. Also in focus today is Puravankar. After reporting their first quarter business update, they've seen pre-sales taking a gap up of 28% on a year-on-year basis. Collections as well have increased by 40% year-on-year, while the company has recorded sales of an area 9% higher than the last year's period. Intellect Design Arena is the last name that is on my list today. The company has announced 3 strategic customer wins for its eMAC AI custody. This is going to be reinforcing the company's growth in enabling financial services institutions to establish these modern custody and asset services businesses. So these are some stocks that we've seen in the spotlight today.
Okay, thank you for that, Meryl. I want to quickly also ask you, Ruchit, with regard to some of the other stocks which are buzzing outside of this IT pack. You know, the top gainers, of course, TCS, HCL Tech, Tech Mahindra, Infi, but Bajaj Auto is quietly up 2% odd. From the auto pack, your top picks and this move on Bajaj Auto, you believe sustainable?
Yes, looks sustainable because of the volumes that we have seen along with the price that moves. You look at today's volume, it's I think 2 to 2.5x what we usually see on a daily basis. So price up move supported by such good volumes are generally sustainable. I think we should see levels around 10,800 to 11,000 in the near term in Bajaj Auto. Apart from this, TVS Motor is also another interesting name where overall structure seems to be quite positive. After an price up move, some consolidation has been seen since last 4-5 days. A bullish flag pattern has been formed over there. So 3550, 3500 is a good support for the stock. So downside seems to be limited here too. So Bajaj and TVS are the 2 stocks which I think relatively if the auto as a sector does well, then there could be a good relative outperformance.
Okay, that's that on autos. In the meantime, just looking at the oil-sensitive trade, and today you're seeing just a little bit of ebb off actually on the likes of an Interglobe, Maruti, even Asian Paints for that matter. Ruchit, what's the take on Interglobe, for instance? Is it going to completely map the way crude moves and very swiftly be a buy on decline candidate always?
It has done recently at least. When the crude oil prices have corrected from that highs of around 9500 where some consolidation was there, we saw that the stock price around that time was around 4200. With correction in the crude price, back to below 80, the stock price have rallied from 4200 to 5400. So overall structure seems positive. Just a bit momentum readings are overbought on the daily time frame chart. So any kind of decline towards 5000, 4900 will make the risk reward ratio again favorable for this stock.
Okay. All right. Ruchit, thank you so much for joining us this afternoon, giving us your views and perspective. Appreciate it. Some of the other movers among broader market names, Kunal, TTK Prestige is perked up 4.5%, Good Luck India perked up 4%. Any names that are standing out from the broader market to you?
Yeah, I think TTK Prestige is something which, out of the 2 names which you mentioned, looks to be a little bit of a more stable chart. The stock formed a low of 400, 450 in the month of March. From there, it's been a consistent pattern of higher highs and higher lows. The stock is now on the verge of breaking above its first major hurdle point, which is around 685, 690 levels for TTK Prestige. The bigger resistance, however, is at 750 mark, which was also the high the stock had made in November, December 2025. And from where there was this 30% plus correction for TTK Prestige. So that's one level to watch out for the stock in the near term.
Okay, that's the take coming in on some of those buzzing names in trade. But Nishchal, just wondering, given the news flow around West Asia, so volatile, its impact on crude even more, what's the right portfolio strategy, at least when it comes to some of the high beta and crude sensitive plays?
So I would actually now say basically buy on every dip. Because if you really look at it incrementally, market has started discounting this news. Yes, this kind of skirmishes are going to keep on continuing because both the players are trying to dig in their peats and trying to get a better deal out of it. But both the players are very clear that they do not have a stomach to go for a prolonged war. So this kind of volatility is going to continue. And that's why I think basically it's a good time to keep, whenever you see this kind of 500-point dip, which we saw on, I think, last Friday, it should be a good time to actually go out and buy.
Okay. The golden question today is also this move on Kalyan. And Kunal, I wonder the 7.5% kind of move, what's driving it? How sustainable is it? 500? What should the... and it's been a very stupendous rally, right? So Can we continue to expect the stock to hold on to these levels?
Yeah, for a surprise, yes, I believe that this rally for Kalyan Jewellers should hold on. Maybe I think you might see the stock going to a couple of days of correction because of this stretched rally over the last 4-5 days. But the entire rally has been backed by some very strong delivery-based buying for the stock price, which is completely different in many cases with the kind of steep upprice trend when you look at the F&O positioning. I was looking at the charts for the F&O's positioning for the July contracts. When the stock was actually start to go into a correction around the 360, 370 mark. That time the open interest net for the current month futures was around 3,31,000 contracts odd. And now we are at a point, I think on Friday closing, we were at 3,33,000 contracts approximately. So that tells you that, there's not been too much of a change in the F&O positioning from the stock perspective. But when you look at the quantum of delivery buying, it started off with say 10 to 15 lakhs as an average delivery volume for the stock price, which till Friday jumped up to almost 2 crores for the stock. So that's a substantial jump on the stock price in terms of the delivery data. And that tells you that this move is backed by some strong, maybe institutional based activity. And those are the kind of rallies or the trends in the stock price, which takes the stock into much higher levels on the upside. What could happen, I would sense in my assumption is that for the next 2-3 months, maybe the stock could just about remain at this 500 mark, 480 band for the next couple of months. But then potentially for the next 2-3 months after that is where I would believe that the second round of up move could start off again into the stock.
Okay, that's the curious case of Kalyan Jewellers. In the meantime, let's take it across to Sajid and find out what else is happening in the F&O market. Sajid?
Thanks, Aisha. The market's hovering about the 24,200 marks. And if you look at the Nifty, it's the IT index which is holding on to this level. Otherwise, all other sectors are in the red. If you look at the contribution of various sectors there. So the Nifty about 24,200 mark, premium of 31, and the open interest is marginally higher at 0.17%. For the Nifty Bank, we are seeing some shorts getting covered there. So the open interest is down nearly 1%. The index itself is up only 0.24%. But look at the constituents from a morning trade where we are seeing a shorts build up across the Nifty Bank constituents. Today in the afternoon, we are seeing some long buys coming in for ICICI Bank, Kotak, and SBI, except for HDFC Bank and Axis, where there's a short build-up happening. Across the board, we are seeing some long build-up or shorts getting covered in for the Nifty Bank there. Look at what's happening in call and put writing. Interesting trend coming in there. The put writers are digging in at 24,000, 24,100. There is a bit of a tussle happening at 24,200 there, but the index is about 24,200 at this point in time, and the distribution will show that currently, as we see, it's a neck and neck on the open interest part for the put writers and the call writers there. And that's what is something to watch out for in the next 20 minutes as we see some kind of rollover for the next week coming in, because tomorrow being the NSE Nifty options expiry there. But on the gainers front, Kalyan is the stock of the day, 7% up. TCS is another stock where we're seeing some shorts getting covered there, 5% up. Voltas is up nearly 5% in today's trade. Among the losers, you have stocks like BDL, short build-up happening. Indian Bank is seeing a long unwind, and Manappuram Finance is seeing a short build-up coming in there. Open interest gainers, again, Kalyan is seeing a lot of open interest build-up happening, 14.8% jump in Kalyan Law. Avenue is the other one where we are seeing some shorts coming in at this point in time, 17.6% jump in open interest, and BDL is seeing over nearly 11% of jump in open interest as we speak. But in the losers side, you have Tata Elxsi, ICICI Pru, and Sona BLW, where we are seeing some shorts getting covered. But the most active stock today is TCS in the stock options. TCS 2200 July call, that's the most active one. See the unwind which is happening, 16.62 lakh contracts getting unwound at that strike of 2200 July call. The stock hovering around 2172, so that's also some resistance coming in for TCS to move above that level. So stock up nearly 109 as we speak. In the put side, we have Kalyan Jewel 4450 July put is also most active. The premium down nearly 5.75, and the open interest is up nearly 10.7 lakh contracts in today's trade. The stock hovering around 510 as we speak there. But As I said, the market seems to be flat, but it's the IT which is holding up the market at this point in time.
Yeah, that it sure is. But Nishchal, curious to know the way Kalyan Jewellers has moved, the way Titan's commentary around its quarterly update as well was whether it's still a quasi-trade or a good one to the way gold prices are moving, or would you say because the ebb off on gold prices, maybe steer a little clear of these names? They're not going to give you as much returns as they did up until the March lows.
Yeah, so that is true basically, because I think both the stocks have run up quite a bit basically. I think Kalyan is up 30-40% in the last few days. So obviously they are not going to give you the same kind of returns. But with the falling gold price, basically the volumes start going up for most jewelers. Because as the gold becomes affordable, more and more people are there basically to go out and buy the jewelry. And they are in the business of jewelry basically. So I think that's where it is positive for them. And I continue to believe, I don't think so you are going to have the same kind of numbers which the industry has put out in the first quarter. But I think there is a strong demand as far as jewelry is concerned. So looks interesting. The whole sector looks interesting to me.
Okay, let me switch on to an ET now exclusive. And PharmEasy's parent, API Holdings, is exploring a revival of its IPO plans. The company had withdrawn its earlier public issue in 2022 and is now evaluating a fresh market debut. My colleague Anurag Joshi is here to tell us more.
Online pharmacy PharmEasy's parent API Holdings is exploring the revival of its listing plan. API Holdings withdrew an earlier IPO proposal in 2022, and at that time it had cited the market conditions at that juncture as the reason for the scrapping of the plan. Then PharmEasy is one of India's biggest online pharmacies, and it was founded in 2015 by founders led by Siddharth Shah. PharmEasy's services include treatment and drug deliveries, diagnostics, teleconsultations, and also the offerings includes collection of test samples from home for deliveries to its labs. The IPO could help some of the older shareholders of API Holdings to exit some of their equity stakes. In 2023, the company API Holdings completed its rights issue, and in that rights issue, Ranjan Pai, who is a healthcare tycoon and controls the Manipal group, he had infused about 1,300 crore rupees into API Holdings, and now he has an equity stake of over 10%. He is the biggest shareholder in the company. So the 2023 rights issue size was to 3,500 crore rupees. To take you a little back, in 2021, API Holdings had filed its draft red herring prospectus with the Securities and Exchange Board of India, which the subsequent year it had withdrawn.
Okay, thank you so much for that, Anurag. I also want to quickly take a chart check, Kunal, on Pine Labs. That's the other one that's perked up, 7% odd in trade. How is it looking?
Yeah, so the short-term charts are still looking more of consolidated for Pine Labs. The major resistance for the stock on the short-term basis is around 165 mark. This is a level which the stock needs to be taken out for. Before it starts off and converts this short-term downtrend or consolidation into any kind of a meaningful breakout. The only positive part and rather a very interesting feature is that the volumes in the past 1.5-2 months, from mid of May somewhere where the stock had seen a sharp correction, the volumes have jumped up significantly on the higher side. And in that scope of volumes moving up higher, the prices have actually consolidated in a band of 140 to 165. Now, essentially, to establish that a trend breakout has happened for the stock and this volume is more of a buying volumes, we need to see the stock to try and break past about the first immediate resistance, which is 165 mark. So even after this 6-7% up move for the stock today, I would still be more on the sidelines. I think 165 is the level to watch out for in terms of a potential breakout.
There are a bunch of names which are being talked about in the market about them being potential MSCI entrants. Loris Labs, Lenskart, Adani Green, Biocon, Coforge. There's Billion Brains as well, which is Grow. There's Apar Industries, Glenmark Pharma, Max Financial, Eternal, and then Uno Minda, which are being talked about. And most of these names are still a shade away from the kind of gains they need to clock in to qualify for the MSCI index. But just wanted to, get a sense right now, Nishchal, on what is it that you're making about the pharma opportunity. Yes, they've had a decent amount of run-up already behind them, but would you still say that they're still undervalued? And any pockets within pharma where you think one can still buy afresh or even add on to positions?
So I wouldn't say there's anything in pharma is undervalued, basically. I think they're fully priced. But given their growth outlooks, I think some of these spaces will continue to do well, still going ahead. Personally, I like CDMO space. As I told you earlier also in the channel, basically, I'm invested in that. I own a few CDMO stocks in my portfolio. And that space, I believe, on a 2-3 year kind of a horizon still continues to do pretty well. And the opportunities are huge in the CDMO space. So that is one space basically which I like within pharma. And otherwise, the domestic hospital space is the other one which I like. So these are the two ones basically which I like as far as the pharma is concerned.
Is the one name which is clearly under pressure, and our researcher as well was flagging off this just a short while back, down about almost 4.5%. But Kunal, is this weakness at all rubbing on to any of the other defense names as well? And do you sense that they may get into a little bit of consolidation after quite a heady run-up that we've already seen?
No, not such, because I think most of the other defense names are actually showing signs of a decent recovery from the intraday charts. HAL, for example, the stock was down 1.5 to 2 percentage points at the start. That stock has recovered to be almost on the flattish note. BEL was one of the other names, which is down 1.5% at the start. The stock has seen a good recovery. It's come back from 408 to almost 412 levels. And same is the case with the other defense names. But I think for Bharat Dynamics, the chart patterns are still a little bit on the tentative side. We're seeing a double top formation for Bharat Dynamics on the short-term charts. The breakdown point or the support point for the stock was at 1330 levels. The stock seems to have broken the support. So till the time it doesn't reverse back and crosses about 1330 levels, I would sense that there could be a mild bit of an underperformance which could come back into Bharat Dynamics.
Okay. Nishchal, I'll come straight back to the IT question and probably quiz you on ER&D. How are you looking at that pack? You've seen some good moves from Tata Tech, but some of the others, the likes of a KPIT, etc., of course, on the back of everything that the company has put out, doesn't look too positive. Do you believe that a turnaround of sorts could also start to play out, given that there's positivity in IT, could also trickle to ER&D at some point of time?
Yeah, it will happen over a period of time, but I think basically at the moment we are not clear from a broader services perspective itself. Because I was telling you, I heard both the calls. There is nothing basically for me to say that there is a structural change which has happened and the bottom has been made as far as IT is concerned. And we have clarity there. So that's why I'm saying this is the first thing will happen is in the services side where you will start seeing some clarity. Saying that, and then you will figure out basically who are going to be the winners in this broader services space, and thereafter obviously ER&D space will be there. But I have to caution you basically that the broader services IT companies, to me, I think on the valuation front have bottomed out. I do not see the same thing happening as far as the ER&D space is concerned, and that's why I am a bit more cautious on the ER&D space.
ER&D, Kunal, how would you rate this? You obviously have turned positive IT and you had waited. I mean, I recall when it was sub 26,000 on the Nifty IT, you said, let's wait and watch. Let a bit of a breakout come. Maybe you let the initial 5-7% go. What do you buy now tactically? Do you go for large cap, and within large cap, what names? Or mid cap, small cap, ER&D? How should you place yourself?
The best way in this kind of a scenario is we look at the statistical part and we look at the pair ratios or the ratio charts for many of these IT stocks within the IT basket. Now, for example, look at comparison between, say, ITC, HCL Tech, TCS, etc., and this kind of a combination. It looks like that on the short to medium term charts that Infosys apparently is one of the stocks which is at an extreme with respect to HCL Tech, TCS, as well as on Tech Mahindra front. So that tells you that Infosys is the one which is deeply oversold on the ratio charts. And when we see that kind of a extreme on the charts, it tells us that maybe Infosys could probably have a scope of a stronger outperformance. Of course, your time frame has to be at least 6 months to 1 year, if not more, for this kind of a scope of outperformance to play out. On the other hand, names like Persistent, Coforge, etc., the ones which have been relatively stronger. From that pack, KPIT Tech is apparently the ones which is extremely oversold. And again, at an extreme in terms of ratio chart. So the best way to try and play an oversold index within the oversold index, try and bet on the oversold stocks, because they are the ones which generally tend to give you a slight bit of more alpha.
Okay, that's the take coming in on some of those IT names, and where is it that there is opportunity right now. Just looking at some of the banking counterparts though, Indian Bank is down about almost 4.5% as we speak right now, or 3.5% actually, stand corrected at that. And the large cap banking names as well are not doing a whole lot today. HDFC Bank is still lower by about 1%. Axis is down 4/10. SBI is just about absolutely flat, though ICICI Bank has managed to recoup the early morning losses, and it's currently holding up by about almost 0.5% as we speak. But let's talk about some of the macroeconomic print, and we've got the India CPI numbers for the month of June, which are expected to rise clearly, driven by a weak monsoon, higher energy prices. Mithali, in fact, is here to tell us what the street is expecting.
Right, so India's inflation picture, it is back in focus, and the consumer price inflation, it is expected to rise above that RBI's target of 4% mark for the month of June 2026. The poll projects the headline CPI inflation to be around 4.3%, up from 3.93% that we saw in the month of May. The estimates range between 3.65% to 5.5%, and if this forecast holds, this would actually mark the first time in 16 months that our retail inflation has moved above the RBI's medium-term target. The key pressure points remain the food as well as the fuel prices. Weather-related risks remain critical for the food inflation outlook, while the higher energy costs as well as the geopolitical tensions could further add to the transportation as well as the logistic expenses. Core inflation, however, is forecasted to be around 3.95%, suggesting that underlying price pressure will remain well contained as of now. For the Reserve Bank of India, the message is clear that the inflation outlook is becoming more complicated. The central bank is expected to keep the repo rate unchanged at 5.25%. But if the inflation remains elevated, the economists see the possibility of at least one rate hike by the end of this year. Meanwhile, the wholesale inflation number, it is expected to be around 9.15%, highlighting continued pressure seen from the global commodity as well as the higher energy prices. So bottom line remains that India's inflation will now actually depend on the food prices, the monsoon performance, as well as the global crude oil markets, the movements there. And for markets, a sustained price hike or the rise in inflation could actually reshape the interest rate expectations, influencing the bond yields as well.
Okay, thank you so much for that, Mithali, for coming in and giving us that. But Nishchal, one of the stocks that has obviously attracted investor attention today is Just Dial, locked in upper circuit. Would you look at a business like this now differently at all? It's obviously got cash as much as its market cap. There's a change in leadership now. Of course, growth has been the concern, but outside of that.
So I think basically we have to look at it in a different scenario. With the AI and all basically out there, I'm not sure actually how Just Dial business is going to actually eventually turn out. Because I think some of these things basically with Just Dial is doing, I think will get disrupted. And that is what my worry remains to be on Just Dial. For the moment, I think it is there, but one has to be cautious.
Okay. I also want to quickly mark out some stocks which are buzzing. I mean, we flattened, or rather we're closing absolutely flat on the index. Probably in the red as well, very, very marginally. But an RR Kabul, Kunal, that stock is up 7+% in trade. How is that one looking on charts?
Yeah, so what had happened is in the last 2-3 weeks, end of June and start of the month of July, the stock had gone through a decent correction from 2500 as a top towards 2180 as the support. So a decent 300 plus point correction for RR Kabel, and that stock is now seeing a bounce back. It took support at the 50 moving average. We've seen this multiple times that when stocks go into a very steep short-term rally and then a correction, the correction generally halts in between the 20 and the 50 moving averages. And those are the points where contra traders or traders who would want to accumulate further into the stock price, they are the ones which generally buy into such stocks. So I think the base of 2200 approximately is a strong support for RR Kabel, and the stock could now be on course of trying to retest the highs of 2500 plus.
Look at Kalyan Jewellers. It's now clocking in almost an 8% of a move. And if we can just bring up the last 5-day chart on this stock, it's really been kind of mesmerizing, the move that one has seen on Kalyan Jewellers. And to think of it, this stock actually fell quite hard after its quarterly updates came in. And since that day, it's really been a one-way street for this stock. But closing in very strong for the technology pack, no doubt. TCS, Tata Elxsi, HCL Technologies, TechM, Infosys, these have all been stupendous winners. There's been a Bajaj Auto, Tata Motors PV, Kotak Bank, ONGC, M&M, ICICI Bank. These have been the leadership names. On the weak side, and by the way, the breadth of the market has closed in tilting in favor of the declines. Tata Steel, Nestle, Eternal, Interglobe, DRL, Maruti, BEL, these have all been laggards. But the bigger damage has come in from the names like a BDL, which fell about 4.5%, Indian Bank, which lost about 3.5%, GVT&D down 3%, Manappuram down nearly 3%, and Grasim as well, which was a rank underperformer with a 2.6% off a dip. Also saw a reaction to Avenue Supermart. Stock fell about 2.25% too. And then Biocon was actively traded today, 1.6% lower on closing bell, but it managed to definitely recover and move off the day's lows.
All right. Some numbers which came today, and I want to try and quickly pull out reactions to some of those numbers. Just Dial was the one right on top. 20% higher on that one. Fino Payment came out with an update. That one too is up 20%. LTM, L&T Finance were the other ones. Slightly more muted move on both of those, but in the green nonetheless. Avenue Supermarts was down 2%. Bajaj Consumer is the other one which came out with numbers, along with Kalpataru. And Bajaj Consumer, while the numbers were very strong, seeing some bit of profit booking playing out on that one. In terms of some of the other newsmakers which were buzzers, Swiggy is the one, 2.4% lower. That very strong move last week. Seen a bit of a reversal on that today. You're also seeing some bit of pressure on Ireda, Keystone Realtors. Those are some of the other ones which are taking a bit of a knock. Ajmera and Puravankara are the two stocks which are actually doing decently well. In fact, Puravankara did very well in trade. Ajmera up 1.6. That's the other one in focus. In terms of sectors, of course, it was all about IT today. But along with it, auto also eked out some gains. So did the PSU banking index, marginally, but nonetheless in the green. The metal index was choppy, 0.7% lower at close on the Nifty metal. But with that completely timed out on this edition of Closing Trades, before I let you go, Kunal, your take on the move today?
See, it was a good move for the markets because at a point where the global construct was extremely negative, the handover from the across the globe, the data points which transpired over the weekend was negative. It was very good to see the markets showing signs of recovery. However, I think we are still stuck into that 250 point range plus minus 24,000 mark. 250, 300 is a major breakout resistance. Hopefully, I think this week we may see that index finally breaking past about this major hurdle and then trying to lift off to the higher side of 25,000 mark. So I think it's more of wait and watch on the index front, but it's good to see sector participation improving. The stocks which were the underperformers in the previous leg of the markets, like HDFC Bank and the IT index, etc., these stocks have started to participate.
Oh yes, they sure have, and finally IT as well is contributing. But on that note, we'll wind it up right here on this edition of Closing Trades. Thanks for watching.